Hey there, everyone. Welcome to this week's edition of Bulls versus Bears, episode 115. If you say it enough times, it must be true. And I mainly say that because President Trump or one of his cronies or a piece of their administration have been on like a 4-hour rotational clock, basically saying, there's a peace deal coming. Oh, Iran's reached out. There's a peace deal coming. And we're back at record highs. So it must be true.
Exactly right.
No ships through the Strait of Hormuz. Oil's still at 94, but must be true. Welcome, Kai, JT. How you doing, boys?
Hello. Very good.
And hi to everyone that's listening.
Yes, and viewing as well. We had the young bloke on last week. It's good to have you back, JT. It's good to have you back, mate. It's just much easier to be a cranky old man when there's not youthful people here. Look, everyone's sick of Trump. So I'm going to be really quick on this bit. Essentially, 46 days to normal supply. If you watch the podcast, you've all seen this. As you can see by all of these, the highlights here, the attacks are still going on. They're below the average, as you can, but overall, they're still attacking 30 times a day. 10,000 more troops have been deployed, and this consumer shock. And there's a new part which is in the middle there on the right is the little blue dotted line and the red line. So the blue dotted line is how much a 50 basis point rate hike costs the consumer. And bearing in mind that the consumer has 50 trillion in debt or something stupid. And that's how, so gas prices being where they are right now, it's costing them double that. So it's like a full percentage point rate hike at the moment. On top of the fact that apparently electricity bills are the number one election issue in the US. And because apparently the war's over. So they don't have to worry about that anymore. But some states are reporting electricity bills have doubled in under 5 years. Most of them are saying $25 to $50 increases a month from the previous bills, and it was a feature story on Bloomberg. There is a deep hatred of data centers from the general public. So I would imagine it'll be an election issue, and they're going to have to deal with it. But obviously the gas prices being high is compounding it. Just a little thing was, sorry, I brought this as well. That's how I feel like the market is this week. That's how it. This is the S&P the S&P is the Stegosaurus on the right. And anyone who's been in markets for longer than 10 minutes is the T-Rex on the left. So it's priced in. Cost of living. Trump should have just stuck to what he promised to do, which was not start wars and keep the cost of living down. It's amazing that he's managed to ruin the plan that he came up with himself.
Wow, that's very great. That's very green on everything technically, right there.
It is. So, that's 2 weeks in a row that we've got that wrong. Thankfully, we have hedged via being long oil, which is actually slightly up on the week. Kai and I were discussing today at lunch, it's where you get smart with your hedges. Like shorting, I have learned shorting the index, not a great hedge sometimes. And if you can do it via any other way possible, it's probably better off to do it that way. So
exactly. Well, I did chat about this. Is that the bond markets are reacting kind of like more logically. The energy markets are reacting more logically. the equity market's still at the party. Basically, they're not calling last drinks. The party's in full swing. So
I refer to Exhibit A.
Exactly right. So
that is genuinely like what it feels like at the moment. It's like and like I said, listening to Bloomberg every morning or Bloomberg Radio on the way in, sort of just to catch up on the bus and things like that. It's like they are just like, what are you talking about? Like we Israel and Lebanon had a peace conference at the White House this week. It's like, yeah, but Hezbollah wasn't invited. And they're the ones you're fighting with. You can't keep calling ceasefires with countries that you're not at war with and then claiming victory. My favorite part of the week, and this was just classic Trump, he had his 48-hour blockade of the Strait of Hormuz, and then he went, I'm opening the Strait of Hormuz again. What did you say this week? It was, never seen a bloke.
I'm just giggling. Like the funniest meme I saw on X this week was just when he blocked the strait, they had him as Don Zu. So that one's been going pretty viral. It's like how do you unblock it? Yeah, exactly. How do you unblock a blockade? By creating another blockade.
Yeah, it's like, we're doing blockade squared, basically.
Yeah. So, but then, so I mean, reality is, well, someone's going to be wrong, unless Trump's got some genius thing up his sleeve this week. Tesla, interestingly, was up because of Terafab, that Terafab project. There was some progress in that, and because it'd been lagging a bit. But I mean, yeah, they were up sort of before and then lagged. But as you can see, this thing just flowed back into tech.
So if you have a look at the breadth numbers, basically, as you can see, the Mag 7 the Mag 10, whatever it is, just the large caps did all the heavy lifting, and that's why we're at record highs. I believe I saw some stats that I think 60% of stocks are still under a certain moving average. I think like their 50-day moving average. So you can just see there's a lot of divergence between the winners and the losers in that S&P. But the fact is, because the Mag 7 are such a heavy component of the S&P in general, even though there's 500 companies, that's why we're at record highs. So I mean, like, I'm not saying that's a reason to get bearish or doubt this rally, but that's what's happened, is that the money's gone into the big names, and that was more than enough to trigger that buying spree.
It's a bit baffling, and thankfully, I'm definitely not always right, but I do tend to learn from from the trading days. The only way you learn from your mistakes, they're painful lessons with your own money. So I don't believe this rally has happened. However, shorting it is not the best way to try and make money, I don't think. So
No.
it's sort of and I had the COB this week on Ausbiz, and I just sort of, and I'm talking about buy the dip and things like that, and I just, in the end I was like, well, the best thing you can do right now is sit in your hands, and I realized what I'd said, and I went, I know that's not a very stockbrokery thing to say. However, you probably should do nothing. And they looked at me like, and it's also not great TV, numbskull. And I'm like, you're probably right. So, but look, I mean,
we're doing a high conviction hold here.
Yeah, we're doing a high conviction, do nothing. So, the ticker for that is NO. But this is the Aussie market. Obviously, Newmont was hit. Macquarie's been on fire lately, I've got to say. It's back nearly at 240 or something. Or 230.
Yeah, it's at the top end of the range again. And either they're trading up a storm, which is what I think has happened. So I think if you read the bank earnings in the US, they're having record trading volumes across their
Yeah.
desks. So that's where Macquarie is just killing it, unless they've dented the big four's stranglehold on the mortgage market. But I'm going to go with the trading wins there. So that's why
Yeah,
it's done so well.
I think that's pretty smart idea. I didn't see anything from Newmont necessarily. Westpac said they were increasing their liquidity, their liquidity buffers and stuff. They called they sort of called it basically that Australia's in trouble, and they think it's going to lead to more. It's going to lead to delinquencies or people behind on their mortgage, etc. And but I don't really know why they were the only ones to get hit on that, considering these four are the same. But they're just walking mortgages. They're not even banks. So they're Australia with that Viva Energy thing going up in flames. You had it for stock of the JJT. You can cover that, but I'm sure everyone's seen on Facebook and probably cried if they've got a diesel car. Watching that thing go up in flames.
Yeah, I mean, let me just put on my tinfoil hat that the timing is extremely suspicious. But what do I know? I'm just a lowly stockbroker. But
the 10th person to say that to me this week. But yeah,
yeah. So what I said with Viva is that look, energy's just been too cheap for too long. This shortage has just shown our reliance, even though we're trying to convert to renewables. The fact is, we still use a lot of fossil fuels for the majority of the industry, and even though it's only 1 or 2 refineries, we think that it's still good value. And kind of like, obviously, it's going to get hit with some selling once it trades again. I haven't actually checked if it's trading again today. Like I was mainly on the phones today. But yeah, I think there'll be a buying opportunity there. And I don't say it heads back to highs, but they are holding what is now considered almost like a utility, like it's essential equipment. And
there's only 2 of them in Australia. It's not like
exactly right.
Valley.
We thought we had plenty when there were, I think, 11 or 13 back in the day. We're down to 2, and I think the market will price that in. That it is essential equipment going forward, and we'll re-rate. But that was my thoughts on Viva.
Yeah, look, I mean, suspicious is, and I was like, because there's been a couple in Texas as well, and there's been one in it was in another one of those Gulf states. I think it might have been Florida or something. Massive fires, and I'm like, and I got on Perplexity and on my phone and just went, and I just kind of talk, type like I speak. I was like, am I having cognitive bias and going crazy here? Like, or are there more of these fires going on? And does it seem, could it be sabotage? And it came up with, yes, you're right. And
to which part?
There is a lot more. Well, there is a lot more, like globally in all around the world, the refineries are like accidentally setting on fire at more than double the rate of normal. And I'm just but then it goes, and then it popped my balloon and went. But it's the likelihood is because they're running they're running them at full pace, like non-stop, no maintenance. And my friend is in the oil industry saying that they're not even allowed to shut down for more than a week for maintenance. They normally shut down for a month in summer for maintenance. So look, there is a plausible reason there. But it does feel sus. Again, look, I'm just gonna, I'm gonna own my tinfoil hat. I reckon there's people. There's so much safety, especially the one in Australia. From my friend was talking about as well. He said you can, like, you've almost got to wear a hazmat suit to get anywhere near there. Like, there's no, and then they have gas leaks all the time. Like they are constantly leaking gas. Like they've got all these measures in place to get so there's no spark. Like someone has to bring a spark into the facility, and you can't get in there. And he also said, he goes, the Australian Army should be surrounding the last one, 10% of our supply. And I kind of agree with that as well. So earnings this week, we had the banks, and I think you covered it before, JT. It was like they kind of beat. JP Morgan lost a little. Like they weren't mad exciting. I think Morgan Stanley did quite well, but it was all the trading. It was the trading and deal revenue. It was not. And they were a little bit cautious on the outlook. Netflix got belted. They smashed EPS and revenue, but their chairman's leaving, and they've got a really poor outlook. Not only on upcoming content, Kai, but on general. We were discussing today how bad it's been. Yeah.
No, we were talking about it a couple of days before, right? Because it was like, what do you think of Netflix? And I was just like, I've scrolled through my Netflix so many times over the last couple of months. I'm just going like, there's literally nothing new coming out. It's just, I wouldn't know why you would still keep the service.
As a father of too many children, Disney and Netflix, I'd pay before I'd pay my health insurance to keep them shut up. Yeah, seriously. No, Disney for the younger ones, and then and I use Prime and KO Sports, but that's the first bill that gets paid in our house. Well, the first three bills. But next week we've got a few, and we kind of like a few of these. So obviously not won't give them away and things because that's a bit disrespectful to our paying subscribers. But we've got pretty much 2 recommendations a week for the next 3 to 4 weeks, and we really did. We all got together and did a really good thorough deep dive, and just because you never know what Trump's going to do. You never know what's going to happen with the oil price. So we wanted to have some hit and run trades essentially, and earnings is always a great place to do that. And we ended up coming. There's a lot of ideas, but there was a lot of really good ones that crossed over. So yeah, for the next few weeks, we're going to have. Well, probably more so. Micron was one that we bought on Monday. So out of respect to the paying subscribers, we'll tell you how they went. And the recommendations are there if you want to get a free trial. But the Micron was one that wasn't necessarily earnings, but once we started to smell it bouncing, we sort of got our head around that memory thing, and that's just rocketed. Like what was it, up 12% in the first 2 days after that Monday night buy that we did, and. There's a few. Well, look, I give you a hint. They're on 2 separate days this week and next week, so you're not getting anything more than that. Get onto Mosaic. But yeah, no, there's some pretty good ones here. Tesla's one of the mags. Tesla and Amazon being the 2 of the Mag 7. And who knows? Tesla will be more. Tesla's going to be about progress on the new stuff. And then it'd be interesting to see how ExxonMobil goes on Friday. Probably, I dare say they might have an okay, but and then there's some of these defence names early in the week as well. United Health's has got that Medicaid thing coming up, so there'll be a bunch of opportunities next week, and it'll only get busier from there. I think it'll sort out a lot of the software companies as well. I think that there's been a string of upgrades for them because people realise that Anthropic hasn't killed a software company yet. So, if their earnings are good, maybe the SaaS apocalypse was a little bit of, it was a little bit exaggerated. The calendar fills up, and generally we got a pretty, there's not much in the way of data. That third week of the month's always crappy for data, and then I guess we swing into payrolls the Friday week. So.
Has that got a regular time again? Like the payroll seems to be all over the shop. Like It's it used to be always that first Friday of each month, and you could almost set your clock by it. It's but ever since
until
the government had that shutdown,
no, but I think they've been back on. It's only been the ICE agents that weren't, and TSA that weren't getting paid, and I think they've solved that now. So but they're really, I would say it would be a full month, but it's so hard to keep up just generally on everything with when Trump's blockading a blockade, reopening it himself, declaring peace, doing this, and then there's a string of other crap he's done this week.
While we are on, just before you head on, we didn't actually have a chat about that name change for the week. Was it All Birds Turned into New Birds, or?
Yes, I knew I'd forgotten something.
So basically, so there was a company that used to sell wool sneakers. Now, because it was based in
wool sneakers.
Yeah, and it was based in Silicon Valley. They pivoted, said they're gonna raise money and enter the GPU as a service industry. And the stock went from $2 to $16. I mean, it closed at maybe $8, but it was just an incredible.
It's up 900% at one stage.
Yeah, and all they did was just pivoted, said we're going to do GPU as a service, and added AI to their name. So I was just like, well,
no. They didn't just add AI. It went from Allbirds to New Bird AI.
There you go.
Yeah. That makes at least 150% difference.
Exactly, but
the ticker is still Bird, and look, and I'm just going, oh God, remember back 2000, 2001, there was junior mining companies who were doing really crap, and it's like, oh no, we're going into the internet. We're goldminer.com now, and then they'd rally 500%. Stinks of that massively.
But this is it just shows we're still in there's still a lot of speculation money out there. if that's can still be pulled off, there's definitely still some money on the sidelines that is looking for any story to just try and make some money. And it just feels
apparently there was a massive short in the stock, is what the stories come out.
Go.
So, and they were very, very right until they changed their name to Allbird AI, as a New Bird AI. But they went from $2.27, and they rallied to $22.37, and then they've dropped back to 10. So they've halved again now, basically the 10.9. So
it just shows that we used to think a NASDAQ listing meant something. It just doesn't anymore.
Yeah, it even sounds like a meme coin. So I mean, look, that's one, that's one for the age. And I just was shaking my head going, oh my God, please. This is you're ticking all the bingo boxes for AI bubble here. Come on. But there's one thing that came up with these were stats that I keep an eye on, obviously, and there's only 4 of them there at the moment, but there's 7 that I generally keep in terms of valuations and overvaluations. And I hadn't, I'm not going to lie to you, I accidentally opened something on Canva and went, oh, I wonder where they are, and because I never in my head expected that we'd be back at record highs. And we're actually now more overvalued than we were in November. So when we were sitting here going, what the hell's going on? And so the Schiller Cape, it's a cyclically adjusted PE. It is double the overvalued threshold. Trailing PE, I mean, that's, it's really just to do a bit of a measure of, to balance out the forward PE thing. But I mean, and forward PE is not too bad. And then the Buffett indicator, which is market cap to GDP, It's slightly worse as well. But they're all over the threshold. And there's a few. There's like a price to book and a price to sales and stuff like that. I think the price to assets was 3-to-1 average, and it's close to the worst in history. So when you get these four in particular at overvalued, there's within the next sort of 6 to 12 months, you're getting at least one 10+ correction at a greater than 70% chance of happening. And then I heard a tidbit as I was, as I'm flicking through things this week, was someone came on and they were being interviewed. They said, so there's a 17% dip in midterm election years, and they go, and they just went, how often does that happen? And it's like 100% of the time since 1940, and it's like, what? So and so yeah, and the guy started going, and I got to work, and I'm just like, no way that, like, I've never heard of that before, and that's like, and dead set 100% of the time. So it's every 4 years the midterms, and the average intra-year pullback within 12 months, or the minimum dip's 10, but the average is like 7 or 18. And in that, and nearly 80% of them occur in this window between sort of that sell in May and then the October capitulation. And then, but on the year, it's the midterm year is positive 86% of the time. So there's, like, obviously what that tells you is that markets don't like uncertainty, and the dips get, and if ever I've seen a market that could fall 16.7% and not look like it's barely pulled back, it's this one.
Yeah.
So so we're I'm not going to go with the crafty segue into buy the dip just yet, because I should have put the slide.
I thought that was the segue.
Yeah, no, I think I buggered that up. I'm missing a slide, but so that's where we're doing the strategy of buying the index in structured investments.
Yeah,
so,
I thought you were going to do the. It'd be good if we could somehow buy that low.
No, I'm not that. Look, I'm not that crafty. Way too obvious. But I did have another slide there, which I've obviously lost. But basically, we're just sitting around going, well, I can't go on TV again and say, let's do nothing. So we need to do something, so we've used that look back feature before, and that midterm election cycle thing was the kicker. Well, and then being back at record highs was the kicker as well. And people have got cash, and you can't deploy it here at overvalued because it's just too risky. So essentially that one will, like, the perfect dates are around that mid-May to mid-October. That captures that 78%. So essentially we're, and if we lock it down now at low vol, we get a cheaper price for it. So, because if we go and, the quicker we get everyone locked in, and the cheaper the price will get. And if it dips, then we're actually, for the next 6 months from that point, you are embracing that. You're almost like banging the table going, get down, like, because you get to get in, because the average 1 year return after that low is 36.5%, which would mean if you did this strategy, and you got that dip, you doubled your money basically.
Yeah.
Within that first year, and then you've got another year and a half to go, where Trump's going to be in power and literally doing anything he possibly can to make the stock market go up. So, look, it's he could not have shown his cards anymore. Like, I think he's almost started the Iran war to get a better entry price or something. He'd be probably, like, I don't know. But yeah, so excuse my very poor segue. I really buggered that up. But obviously, lithium and uranium have done well this week.
Lithium, especially today. So have a look at the charts of pretty much all the lithium miners. Unfortunately, I took some small profits on Liontown, and it's just ripped after doing so. But yeah, generally it's broken out. Have a look at Albemarle as well. And yeah, this just shows
that's in our critical minerals, one of our critical minerals.
Well, I actually had to show that to a client today and just show him where the position was. But yeah, just in general, I think this is a taste of what we could see going forward. So obviously, this is everything's supply and demand driven. But I think obviously there's elevated demand for lithium with everyone moving into EVs. But let's just say the Middle East causes more supply crunches as well. We could see the other side of that equation, which is a supply-driven jump as well. So I'm just curious on how things go from here. And I think if you're looking at the charts and looking at the setups, there's definitely a chance for a more explosive move higher as well. And I think we'll see that through a lot of commodities with some of these inflation prints coming through.
Albemarle's like that. It's 20% this week. Was 16% yesterday. But I kind of thought that at the start of this thing, where uranium and lithium got hit, and I said on the morning call like a number of times, like I think probably the best thing to buy the dip on was those critical minerals, because it's for the same reason that people wanted to buy electric vehicles. It's like, well, buy the stuff that they're going to need. So I was really surprised they got hit as hard as they did, because all this teaches us is, well, I mean, sadly, COVID should have taught us this lesson, but it didn't. Lock down your freaking supply chain. And, we, as per usual, we have learned nothing. So, this is why we have black swan events every 11 years, is because people go, what are you talking about? That was like the olden days. I'm looking at you, private credit. Mortgage-backed securities in another wrapper. But that dog and pony show will go on for a while. Well, hey, and look at that segue. Look at that.
There you go. That's a better segue.
And I'm embarrassingly surprised by it, because I didn't think that slide was there either. But yeah, I did this little dashboard to keep track. But so this bit's interesting here. So here are the redemption requests. On the bottom right, the BDC redemption requests. So there's a 5% quarterly cap basically, and that's where you see the green bar at the bottom there. That's at the 5%, and there's only one of them it's Goldman's, I think, and that where they can safely release what's been requested to be released. You'll never guess who the top one is. It's the old owl. Everyone wants out. But because they've capped redemptions, that shows the backlog basically. So, and this will basically, it's the default rate is really like, if we get, I mean, I think it's almost a scene in The Big Short where he's talking about default rates. If they get over 10, this is like, or 12 or something like that. It's disaster. So we're a 3 out of 5, but number one being systemic, like DEFCON 1 being the worst, and then 5 being the least worst. But yeah, the credit default rate, and the banks have got, they've got 180 billion direct exposure, and then passive exposure gets up towards 800 billion.
Jesus.
Yeah. So, and that's, I think, for half of that's untapped lines of credit. So they can obviously not give them out, but if they're contractually obligated to, then it becomes a bank problem, which we promised in 2010 to never do again, but yet here we are. So, but we'll just keep an eye on this, because I think they're doing a really good job in capping those redemptions and stopping like a bank run, where everyone's trying to withdraw. And as much of a private credit bear as I am, that can solve the problem, because private credit between 2007 and 2012 over a 5-year period didn't do that badly. Like on the, if you were willing to wait, but the issue is the panic Like when there's a fire in Seinfeld and George Costanza pushes the old lady to get out of the door. Like, it's every man for himself when those situations happen. So, and this is this is really good because I can just get like this. Our beautiful friend Claude is I can pull all this data and then it just keeps it in a nice, simple and clean way for us to have a look at it, because you can get out of kilter when you've got when you're cherry picking. But look, boys, we're 2 weeks in a row. All three of us have been wrong.
Is that right? Like we're at 62 for greed now. Wow. Okay.
Yeah, we are actually.
So what was the last week? Do you remember?
It was fear. It wasn't extreme fear. I think might have been 20. It was only just it was near extreme fear.
Let's not forget we are at record highs. So basically, why wouldn't you be celebrating if you're long the Mag 7?
Look, and I've got to say, it was mixed. I'm like, I don't understand it. I think it's stupid. I'm not death riding the market either. Like we've got some really good thematic things on, but the great thing about it is they're 2 years. I think the shortest one's got it's got probably about 12 months to go. So we're kind of seeing through this anyway. And I think that thankful it wasn't because of Trump, but in hindsight, the longer the time frame, the better with him. So I'm going to now. So you were orange, weren't you, JT? I think you were orange. You're bear for next week. Kai, you are bullish.
Yes.
We've got different
broken ranks, and I've never seen such a toss of a coin in my life. So I just asked Grok, and I'm bullish as well. Because it sort of resonated with me because it just said the technicals are positive. There's light data. The ceasefire's going for another week. It was exactly what I was thinking. It was like we're probably like up 0.5%, and I'm like, oh, God, I hate you, but yeah, you're probably right. So, but yeah, and I think the earnings thing as well. So this slide I did not do. So we're just going to have to replace me and Kai with two little bulls here. So yeah, I'll be catching up on someone because as we can, JT, you might go ahead. You might really gain some ground next week.
We'll see. We'll either gain ground or lose, end up being last, basically.
Oh, mate, anything's better than where we were at week 7. I think I was on 1, so it's been a bit of a comeback. But yeah, look, we managed to get through 38 minutes with very limited Trump talk. And apologies for my segues on Buy the Dip, but please do go and have a look at. So you can scan this code and you can go to the website and have a look at Buy the Dip. There's a little video explainer and it and a document and everything. And what is it? Kai was around the $17,000 cash for 100,000 notional exposure.
That's right.
And there is optionality for a tax deductible wrapper as well on that. And then and it's a 3-year deal. So and look. We don't really have to give the pitch. It's more about with the indexes about the entry point, and we and trying to pick that really because it's pretty damn consistent. So we don't really if anything, we're sitting here going, how the hell is this thing at record highs? So that probably doesn't prove the point. I don't know what does. And then so we're it's a really effective way to I think to particularly that I was so surprised about that statistical anomaly on the midterm year. That I hadn't heard it before, because there's very few things that are ever 100%. So yeah, I guess we'll see what happens. But but D's of it's only a 5 or 10 minute or 10-minute explainer, and yeah, it'll close up in May, and then that really beautifully snugs the. I back tested back to the 80s, and that it was that timing for the 6 months captures them statistically the maximum amount. So and the day that you need to buy the dip, it's always the scariest day. So you can take some stress out of your life, people, and get on board. So yeah, anything else to add, gentlemen? Or we just exhausted of the constant news flow?
Look, let's just hope that we don't get news flow this weekend. Have a weekend where we don't have a Monday Asia panic, basically.
I think it's time for a rest. I'm
probably the first one.
I'm not too sure what else we can talk about in terms of Trump, right? Like, I mean, we've laughed at him, called him crazy, called him a genius. I don't know where else we can go.
I'm sorry. I thought about saying something then, and I'm not going to. It was, a quiet weekend would be brilliant, essentially.
Yeah, exactly.
And it would be the first in two and a bit months. So it'll make the morning call on Monday a little bit more relaxing. That's the aim is 4 minutes only on the morning call on Monday. And obviously they're not people not to get killed in a war and stuff like that. That's a given. We almost need to do a disclaimer for that now. We're looking a little bit heartless, but have a great weekend, people, and we will. I guess we'll catch you next Friday afternoon.
Yeah, thank you.
Thanks, guys.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.